Hello traders, this is Fawad Razak Zala, market analyst for City Index. Today is the 5th of September. So far this week we've had at least two weaker than expected employment indicators. Today the ADP private sector payrolls report came in at 99 when 144 was expected, and the previous reading was revised lower, as you can see. Yesterday the JOLTS job openings came in weaker than expected, all raising concerns that the employment market is weakening and that the Fed will have to cut interest rates at least by 100 basis points before the year's out. The key employment data is obviously the non-farm payrolls report due for tomorrow, and the headline is expected to come in at 165,000, with the unemployment rate seen falling actually to 4.2 from 4.3 the month before. If, however, the actual data comes in weaker than expected, then the dollar selling could accelerate and we could see the likes of the euro dollar rally. The euro dollar has bounced off of this area, previously resistance. We broke above this area in the middle of August. Since then, we've had a pullback. Price retested this area a few days ago, and now it's bouncing back with support at 110 to 110.50, holding firm. Here we have the 21-day exponential moving average coming into play. Earlier this year, in April, the euro dollar formed a low at around 106. And since then, we've had a few higher highs and higher lows. As a result of that, several resistance levels have broken down, with price also moving above these key moving averages, including the 200-day moving average. We've also taken out this bearish trend line that had been in place since July of 2023. So the trend is clearly bullish on the euro dollar, and because of a weakening US labor market, we expect the trend to continue and possibly reach 112 and possibly even 113 in the weeks ahead, for as long as we don't see a surprise rebound in economic data from the US. Thanks to weakness in US data, we've seen gold prices continuing to push higher. Yesterday, gold formed a hammer-like candle on the daily time frame around 2,470 to 2,480 support area, which was previously resistance. We also have the 21-day exponential moving average. Previously, I had highlighted this as being an important support area, and so it has proved. The hammer was formed, and today we are seeing some follow-through above the hammer head, which comes in at 2,500. So that level is now the key support to watch on any future dips. In terms of resistance, well, there's not much in the way of resistance really, because we are trading near all-time highs. The all-time high that was hit in August, on 20th of August, comes in at 2,530, 31 even. So that's going to be the next level to watch. If we break above it, the question is, will we hold above or do we go back below? I mean, even if we do go back below it, it's not like that kind of price action hasn't happened throughout the summer, because you can see lots of false breakouts, but ultimately the trend has held. So for as long as we maintain these higher highs and higher lows, the path of least resistance on gold will remain to the upside. And from here, it's anyone's guess really how far gold could head to, but do watch out for profit taking around handles like 2,600 should we get there, 2,700 and so on. Support levels to watch, I mentioned 2,500 and this shaded area. If we were to break below this shaded region, then that could potentially pave the way for a deeper correction. But we'll cross that bridge if and when we get there. Silver is also looking constructive ever since bottoming out in early August at around this key support area, which had been resistance in the past. Since then, we've had a nice rally. We broke above this high at around 29.20-ish. Before prices dip back to drop all the way to the point of origin of the breakout at around 28, which has now held as support. So it's good price action from a bullish point of view, and it looks like silver may want to hit to 30 and possibly break above this area this time. Then that could potentially pave the way for a new high for the year. And if you look at the long-term charts, they look quite constructive. This is the monthly chart of silver. Previously, silver was in consolidation for several years following COVID, and we broke out of this consolidation pattern in April leading to a push above the $30 level and a move above these highs. Since then, you can see that silver has spent a few months in consolidation, which is always a good thing to see after a big breakout like this. So if and when we now go on to break above the recent highs of around $30, then that could potentially signal the resumption of the long-term upward trend. So definitely watch silver prices here, because we could be on the verge of a big move. Now, for more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.